the surface, he looks calm and ready to drop bombs, but he keeps on forgetting what
Yeah, what is up, Ramin?
What's going on, Lou? How are you, brother?
I'm doing fantastic.
Hey, this morning has been kicking, man. I've been up since 5 o'clock Pacific time, and the first thing I heard in the
You did
morning,
not hold on. You did not get up at 5 a.m.
I've been up 4:45, bro.
Let's be serious.
I'm being really serious, bro. Yeah. So, I don't know if you know, I teach business at Kenyatta College, and so today was the first day of class, and so it was interesting, but I had to get up and drive over there. So, but yeah, man, I woke up to the sound of Patrick but David, and he told me something that was kind of crazy. Every single social security number in the United States database has been released on the dark web. So I immediately put out something about that. It's insane. So it's a new lawsuit. It's not a new lawsuit. I'm sorry. It's something about hackers have gained access to the private information of millions meaning 300 million alive people, 500 million dead people, 2.9 billion records are on the dark web at this point. So some company named National Public Data had a data breach, and it's everywhere. So I told everybody immediately on all my channels, I said, you need to call the three agencies, Equifax, Experian, and TransUnion, and get your data frozen right now. Also subscribe to LifeLock or some kind of data monitoring agency,
Right.
because that's the only thing you can do at this point. And then just keep monitoring your data, make sure nobody's buying a house in your name.
Yeah, well, yeah, that's so unfortunate.
2.9 billion, man. That's insane. But even forget the 2.9 billion, 300 million alive and active social security numbers were hacked. That's just incredible. So along with the other news, it's insane.
All the doom and gloom. What's up with this doom and gloom?
You're telling me, right? So yeah, dude, we had a great week in terms of rates, right? And all of a sudden, rates went back up. You see that blip?
They did tick up. Well, today they did big time because of the retail sales report. Apparently, people are spending, but where are they getting the money from? Is my question. What are your thoughts on that?
Well, I really don't get it. So I there's a guy named Chuck Cowan on LinkedIn. He's always posting about the economy, which is awesome. And I also listen to George Gammon, which I know you listen to George Gammon as well.
Yeah.
Barry Habib religiously every single morning. Credit card debt is at all-time high, 1.4 trillion at this point. And then we're so out of money that now we're going and using these BNPL programs, buy now, pay later. And so, okay, that's when you make 4 payments or less on something, and it doesn't get reported to the agencies. But that's on people are not paying their payments anymore, and they're behind on the payments 90 days or so on these 4 payment or less programs. So I'm out of money on my credit cards. I'm out of money on my BNPL programs. I have no savings left because we depleted savings at $72 billion a month or something like that back in 2023. So where's this money coming from? In July, we had an uptick. I think, sales rose by 1%, and that sent the bond market into a frenzy.
Yep, I know. It's crazy. And then with the Fed funds rate so high, credit card interest rate so high, I mean, people have to be defaulting at this point. I mean,
so this is indicative of a couple of states. I think I've talked to you about this before, but if you look at Florida, something like 87% increase in inventory out there. So the theory is that I don't have any more credit cards. I have no more savings. I'm behind on my payments. I got some equity in my house. I better sell my house, right? And so you're seeing defaults, actually more sales in Florida, in Houston, I think. Louisiana was another state. I think Idaho is on the uptick as well. So there were like 5 states in the report. I don't have it in front of me, but yeah, the states are seeing more and more inventory coming on because people are just getting rid of their house because I don't want to have this 25%. But Macy's credit card, bro, 25%.
25. That's with good credit.
Yeah, of course.
Yeah. That's with good FICO. That's with a good FICO score.
If you use the rule of 72, right? 70, where it says if you divide the interest rate into 72, so this goes 3 times. That means every 3 years, if you're making your minimum payments, you're doubling your debt. So a $5,000 debt in 3 years will become a $10,000 debt, and you'd multiply that by whatever you'd like. If you got $20,000, it's $40,000 in 3 years. That's a lot of money, bro.
Mm-hmm.
Yeah.
It is. So, what do you think? I mean, that kind of leads into the next question. What do you think the Federal Reserve is going to do? Do you think they're going to actually go 0.25 or 25 bips or 50 bips or 75? And
I'm
now
excited.
with this retail sales report being so positive, and you know what? I think that's a bunch of baloney because look,
I did.
during the summer, travel a lot, you buy stuff, right?
Right.
And then again, credit card debt, and then back to school. So you're spending a lot for back to school. So
Back to school is key. I think that's key. But
yeah,
then you're
so
seeing like Walmart just put out their report that they had an increase in sales. But so Walmart is the place, or Target would be the place you would go to get your back to school supplies, right? So that
right.
makes sense that they got the uptick. But then Home
Yeah.
Depot is reporting a downtick, right?
Mm-hmm. Yeah, Home Depot is like bad.
It's very bad.
So yeah, the essentials, we had to spend a ton of money for back to school, right? Shoes, I mean, typical stuff, clothes, um, shirts, shorts, books, pencils, all of that
Pencils,
stuff. I mean, it
notepads,
adds
dude.
up,
Yeah, it does add up.
right?
Notepad,
So
baby.
so yeah, there's your spending, but now you take this report and oh my God, it's a soft landing. I love the headlines. Oh my God, the headlines are so clickbaity. Uh so are we in for a soft landing? Did we achieve soft landing? What the
There is no way it's going to be a soft. I really don't think, unless some magical beanstalk appears, from nowhere. Look, dude, the Fed has two mandates, right? Uh, keep the
unemployment?
keep the unemployment low and keep the interest rates to a point where they can manage the inflation down, right? So at
Right.
2% of their target. So unemployment. I've been talking about this on LinkedIn. Again, Chuck Gowan, thank you for posting whatever you're posting out there. It's amazing. But BLS report, it comes out every month, right? Actually, every Thursday we get a jobs report, but every month we get a job report from BLS. It's off. We had what was it? I think it was 12 weeks running. We had the same number, 212,000 unemployment, okay, or new jobs created across 50 states, Lewis. Every
Mhm.
state has at least 100 unemployment offices. How does every single month for 3-4 months running have the same $212,000, 212,000 jobs created number? It's impossible.
Yep.
So, and they keep revising their numbers. They'll come back in July and revise June's number, and they'll come back in August and revise June's number again along with July's number. And we saw that again this month. I think they revised down by 7,000, I think.
Yeah.
So the 212,000 job creations, that's just insanely off.
Yep. I'm trying to look it up as well. But why do we pay attention to these reports? I mean, they're revised and then those
Re-revise.
revisions are not taken into account and the market takes off and does what it does and yeah, the revisions come back and it's worse. Sometimes it's worse. A lot of times it's worse.
Yeah, and I think this is just an overreaction on the bond market at this point to this news about, because they were expecting sales to have slumped in July, which is what you and I would expect. Again, if people are unemployed, no credit cards, no savings, how are you going out there and spending money?
Right?
It just doesn't make sense. And so again, this is an overreaction, I think, to, I'm not sure if I want to say fake news, but it seems to be almost fake news essentially. Maybe it's just, we're not the economists we think we are, and we're just reading into things. But I'm listening to, George Gammon. I'm listening to Peter Schiff. I'm listening to Ray Dalio, right? And they're all saying the same damn thing. So I don't know
Right.
what we're going off.
And we're not like doctorates and we don't have doctorates in economics or any of this. I mean, we're not the pros. We just kind of read, look at the charts, look at some of these things, and it just doesn't add up.
Yep, it doesn't add up. And Walmart, what they released their earnings this morning, they said they beat estimates. Usually, Walmart does pretty good during downturns in the economy because consumers tend to trade down. They're not shopping at Macy's anymore. They're shopping at Walmart for the cheaper goods. But we're seeing a shift where consumers are spending on needs versus discretionary spending. I think we're really seeing discretionary spending go down. And was an article last week saying 80% of Americans think that going out to eat is a luxury at this point.
Mm,
That's an insane number.
Wow, 80%. I didn't.
80%.
Yeah, that's a big number.
You know what's also interesting, Lou? There's a report called, I think it's called the Lisio report. It showed the tax collections. All right, get this. So sales tax collections, right? Sales tax collections took a serious dive in July. The report showed the collections missed projections by the largest amount in 15 years. So this is where the government comes in and says, "Hey, uh, what do you call it? I'm giving you money for this item. I'm paying sales tax on it." It went down 15. The lowest has been in 15 years. This collection cycle. It's insane. We actually have a user on LinkedIn who says, actually, the Fed mandate is a tri-mandate: maximum employment, stable prices, and moderate long-term interest rates. And Powell is a lawyer, not an economist. Ridiculous. I
Right.
absolutely agree with that.
Mm-hmm.
Who's the Fed?
100%. I
Right?
love that.
Give me a sound on that one, Lou.
Hell yeah. Hell yeah. Here we go. Here we go.
Absolutely agree. Absolutely agree. It's insane. And who's that? Who's the girl that does is a Fed chairman for San Francisco? Michelle Bowman. She's also, she had a job at her dad's bank before she got this job at the Fed, and she's a lawyer too. And these guys are, as Barry Habib says, looking in the rearview mirror, trying to tell us where to steer the car. It's insane.
Yeah. Yeah. I mean, look at the interest that the U.S. is paying, that we're paying as taxpayers, right? Because eventually it's all on us, on the national debt, right?
Oh,
It's more than the military spending at this point.
right.
So, we got problems when paying the interest on our own debt is higher than military spending.
That's a big number, dude,
That's
and that's crazy.
absurd.
Absolutely.
So on
Yeah,
that,
go ahead.
what do you think? You think the Fed has no choice but to get the rates up? I mean, get the rates up, bring the rates down,
They have to,
do that
as
rate cut.
Narika asking, "Hey, are we going to have a rate drop this year?" Abso-freaking-lutely, they have to. It has. And so here's another deal too. Don't forget
Well,
the
what if we have another? What's the next report that comes out? The jobs report. What if
Yep.
that comes in hot?
Well,
And
it's
then
going
they
to come in
say,
hot, but is it real? No. So, and again, I think that the election also plays a big role in this. I was in a realtor meeting on Monday, and one of the gals in there mentioned that every single election cycle we have, rates go down, and then after the election, they click back up, and it's great to see that happen actually. But rates will come down, Lou, and it's I think for homeowners and for anybody who has a house, dude, if you got credit card debt, which I know you do, you need to refinance or pull some cash out and pay off those 25% cards. I'm definitely, as soon as rates come down another, probably an eighth or a quarter, I'm definitely pulling out some money to pay off some of my high debt cards. It's insane. It's just ridiculous. 25% for Macy's. I blew up when I saw that bill.
yeah, it's up there. 20, yeah, 25, 18. I think the lowest one I have is like 18%, which was at one point like 6%, which
Right?
is
Yeah, or
cool.
don't pay
Like,
anything until 2025 or something.
yeah. And then how about the transfer offers? The when you transfer from one
Yeah,
bank to another, I forgot what they're called, but yeah, those went away. I don't think anybody's getting those.
nobody's getting those right now. No,
The
no
transfer
payment,
your
no
balance.
payments until July of 2025. That's not
Ye-
happening right now. But
Yeah,
yeah,
it's not.
it's insane, Lou. But we got to keep a close eye on this stuff. And I'm glad I'm not the only one talking about it. And it's interesting. We went to that the Make a Wish Foundation baseball tournament or softball tournament, and I was talking to a couple people from credit unions as well. And
Right.
again, they're playing the junior economist role, like you and I are, right? Reading, listening, watching, and it's everything you're seeing. It says, "Hey, dude, something's going on over there," but then all of a sudden, nothing's going on all of a sudden. So it's crazy.
Hmm. Yeah, we got to stay sharp on this because there's a lot of noise. Media is all focused with the elections, which is uh, uh, uh um, I want to say it, a shit show. I'm gonna say it.
Thank you for saying that, buddy.
It is. It's all over the place. It doesn't make sense. And and it's on both sides too. So I'm not
It
even
is.
gonna
It is.
claim
It's not
one.
one side or the other. It's actually both sides. Yeah. And
It's
actually,
all.
Lou, another indicator. I was watching. What is that? The New York State, or was that something? The manufacturers index, right? It measures.
That's right.
It
That
measures
came in
how
low. I saw that. I know what you're
negative
talking
five,
about.
-5, man. And also the
Yeah,
Philly Fed came out with their number too. That was also low as well. And so they're talking about manufacturing is in a recession, but again, our rates are not coming down right now. So, but I do think
because consumer spending is up, right? As of today, oh, consumer spending is up. Well, the economy must be robust. It's strong. But yet the manufacturing index is down. I forgot about that one. And that came
yep,
out today as
yeah,
well. Why
man,
didn't that counter? That should have just countered
it's just that
the
sales went up.
retail
It's just that sales went up, and that's what's going on.
that waited a little more.
Yep, and we had a CPI number, Lou. You're pretty big on CPI. Tell me what's happened with that.
Well, it went down. Like it's trending down. The only reason that it didn't trend lower is because of the living rental and housing it came in higher. So came in really strong. But if you remove that, inflation
It beat
actually went down
estimates.
more.
Absolutely, yeah. So
But they do, and then I don't like the way they do the core CPI where they remove food and energy. It's like you have to use food. I mean, everybody eats, so you need that, and you need fuel, you need energy. Why are we removing that from the core CPI number? Like you got to count everything. And
I like to count that when I'm trying to compare
mm,
to what happened in the 70s, right? So because we can keep the same ratios as we were back then, and if you don't strip out the core and stuff, then you're back to the 70s, and we are actually in a very high inflationary environment. I think something to the extent of 8 or 9%. Barry was saying in one of his talks. Um, that's huge. That's a lot.
mm. Wow.
Yeah,
But I still think that the rates are going to drop.
I do too. They have to. They actually have
Well,
to.
I mean, it can't go much longer. Like really, really, it can't. It can't. How, what if they don't go down in September? What if the Fed fund or the Fed says, we're gonna wait till October meeting?
There's no
What then?
way. There's what 14 members say 25 bips, right? And
Mhm,
there's two more members that say 50 bips, right? So we got 16 people for sure that say 25, right? And then two
mhm.
more on top of that that say 50. And now they're talking about another couple Fed members coming in and saying potentially 0.75. So if not by September, for sure by the new year, we have a rate drop of at least, I would say, 0.75%.
Hope so.
And what's interesting about that number, and I keep talking about this all the time, is every 1% that the interest rates go down, we got 5 million new buyers coming on the market. So you think it's a hot market. We talked about that yesterday, I think, with Joel and Lawrence.
Mhm.
Uh, that's you already got a hot market with low inventory. Now bring into that the people that couldn't buy a house at 7%, now at 6%, they're going to be buying houses. That's 5 million more people that come on the market and are competing for the same home.
Yep,
It's
more
insanity.
offers. More offers equals a higher price. And this is just to be clear, it's very specific to the Bay Area.
Oh,
So
yeah.
this doesn't apply to Florida,
Kansas,
doesn't apply to Kansas. Well, some parts of Florida,
Toledo.
probably. But you know what I mean? Like
Yeah,
Silicon Valley, I think, has always been somewhat insulated from all of this. And we're still having a lot of trouble getting people into contract. I mean, I don't know. I can't even count how many pre-approval letters I have out, and offer after offer. I have to talk to the listing agent and be like, "Hey, my buyer is fully approved, like underwritten. He's ready to go. Look at the proof of funds work. Come on, let's go. We can close in 10 days." I mean, that doesn't even work anymore. Before it was like, "What? 10 days? Let's go. Yeah, we'll go with your
right.
offer." Now it's like, "No, it's okay if we go 30 days. We just want $200,000 more because we got another offer at 200,000 over asking."
Yeah.
It's
And
like,
that typical here. It's insanely
Like,
typical.
damn it. All right. So I think different sorts of challenges in the Bay Area as opposed to say Austin, right? Austin is yeah, it's kind of a balanced market.
Lou, you live in Austin right now, right?
I am. Yeah.
Okay. How's the environment out there? What are you seeing? Is it same kind of San Jose, Bay Area type of
Abs-
market?
Absolutely not. There's no way.
Prices coming down, do you think?
Prices are they already did their adjustment. They already went down and they're holding steady. But,
Okay.
days on market are 60
Oh,
to
wow. Really?
yeah, 60 to 75 days.
Dude, there's nothing that stays on the market for 60 days here.
No way.
No.
15, 20 days tops.
Yeah, and that's if you priced it wrong, I think, and you maybe did
Yeah.
one price change on it, you're back in the
Mhm.
game. Absolutely,
Yep.
yeah.
So it's definitely a different market here. I think it's balanced. You still have buyers because remember a lot of sellers they bought before the prices shot up. So they're still sitting on like, 100, 200,000 or maybe 25% equity. So some houses in this area, they went up 100%. They were like 300,000, they went up to like 700,000. They went over
Yeah.
100%.
Cupertino, man. Cupertino and Mountain View. Mountain View, I didn't think was this insane, but it's insane in Mountain View, man.
Mm, yeah. No, but here we had there's a town called named Liberty Hill. So that there were some houses there, 300, 350. They went up to like 900,000 in a matter of 18 months. It was just wild. And then boom, it dropped within the next 12 months. They dropped about, I want to say about 30%. And then everybody, of course, doom and gloom, the end of the world. But people that bought at the right time, they were still up. They were up 30, 40, 50, still 50%. So it wasn't bad. Houses
What's
are
that
now
famous saying? When's the perfect time to buy? When's a good time to buy a house? 5 years ago.
5 years ago.
Yeah.
I truly
Well,
believe in it.
I still think it's a good time to buy, honestly. As you wait, especially with the appreciation we've had in this Bay Area market, 20%, 15 to 20%, depending on where you live. A new
20,
thing came out
yeah.
yesterday was I don't forgot who wrote the article, but the $2 million is now the median home price in Santa Clara County and San Mateo County.
Yeah. That's your starter home, right?
Yeah, that's the median home price. Median, that's the middle of the line.
Hey, what about a 1.2? That's a
No.
teardown.
Honestly, in January, I helped Sandy Cisco with an open house, and that was a beat down home on San Jose Avenue in an industrial area. It was $1 million, and I think they sold it for 1.2, if I'm not mistaken. So even that, it needed work, it needed renovation, and you couldn't just move in there, so it was done. But
Mhm.
yeah, 1.2. So there's no way you're getting a house for 1.5 here. At least not. Maybe in the East Hills and San Jose, you're going to get a house for that price. But I think you're going to be needing some serious repairs.
Mhm. You got to go to anything under $1 million is now Hollister. Even Gilroy is
I don't think
up
Gilroy's
now.
doable. Yeah, maybe 1.2, 1.3, somewhere in that range.
1 point, yeah, 1 point. Yeah, you can still find something right in Gilroy. Hollister about 800. You're still good.
Yep.
So yeah, I
Then you
find a
got
lot of
to,
people,
how far are you going to
actually,
drive to work if you're living in Hollister? How long does that take you? 45, at least an hour, I would say, from Hollister to come to San Jose.
right. So about an hour. Sometimes it's a 2-hour drive, 1 hour and 45 minutes. But get this. This is a trend. Well, 2 of my clients did this already. They buy that house. It's a beautiful house. They paid like 800,000. It's gorgeous, right? A lot of land. They're super happy. And they commute to work. And guess what? They got themselves a Tesla. And the Tesla semi-auto drives. They're just
Yep.
watching a movie on the way
Watching
home.
YouTube as they're driving home. Exactly.
Yeah. So imagine that. Like, I think that's doable. Just jump in your car, throw on a movie or throw on a talk show or something and
Podcast or something. Yeah. Watch it.
podcast. And before you know it, you're your home, and you're like,
And
oh,
they're charging at work, so they don't have to pay for gas anymore. They're using their the electricity from Nvidia or whoever to charge their car for free. Hey, Joel Ramirez on LinkedIn, he says, how savvy do you see today's prospective homeowner is in regards to actually understanding what impacts mortgage rates? Is it much better than it used to be? I bet. I think Joel, in San Jose, I think you've got a lot of educated people that listen to things like this, or watch the George Gammons of the world, or listen to Barry Habib, so they're pretty educated. But I would tell you, I think so. It's like this, man. I can get as educated as I want about my heart, but I'm not a cardiologist, right? And as good as I think I am, I think I'd rather go see a doctor about that stuff. So they think they're smart, but they're not going to be able to, do surgery on a body, right? What do you think, Lou?
I think there's an ocean of information out there, which makes it so difficult to find the real information. There's a lot of clickbait. Okay. So you get a lot of, oh, look, 4.75% interest rate. What? Really? Click. And then get wrapped into some kind of lead funnel.
Lou, did you tell me about you got an offer for 3.9 or something like that?
Yeah, 3.99 in the mail. And
Yeah.
then you read the fine print, and it's like 2.2% discount fee and all that BS. So they're not really breaking the law, but it is misleading to the average person. So read the fine print. It's always there.
Definitely.
And a lot of, again, going back to this, there's so much information. You can become an expert on any topic. Like I built a deck. Okay. I built a deck watching YouTube University. Okay. Which was amazing. Like I'm so happy because I'm not that kind of guy. And I even bought the tools and everything, and it's freaking amazing. Like
That's the fun part, is
I
buying
should
all
take
the
a
tools.
picture. Yeah, it's kind of like a Lego. I felt like I was building Legos. But anyways, point is, yes, I was able to do that. It took me like 4 months, a weekend here, a weekend at a time.
Right.
It took forever. Now, if I was to do that professionally, like, yeah, I'd starve. I'd be done. So again, why? Because these contractors that have been doing it for 10 years, 15, 20 years, they have the experience. They know the shortcuts. They know they know what to look out for.
Yeah.
Right. And that's the same thing here. Like not a single loan is ever the same. Not a single transaction is ever the same. There's always things that change, and you have to know how to kind of ebb and flow with those changes and problem solve. And that's typically why the big banks like Wells, the cities, and the online lenders at the first sign of trouble, they say, hey, declined, sorry, we couldn't help you, and they move on. They don't try to problem solve. And that's key. That's key, especially when you're buying a home.
So Lou, give me some advice right now. Do you think rates are coming down, first of all, and how much they're going to come down in September? So if I'm buying a house, should I wait? Right now it's August 15th today. So should I wait till September 15th and September 30th to buy a house? Or
If
should I
you're
buy it at
ready,
night?
if you can afford it and you're ready to move, don't wait. Okay, just do it. I always say that, and I've never been wrong. I've never been wrong. Just get into your home. First year, heck, you might regret it. I get that a lot. Oh, what did I do, Luis? Like, oh my God, I can't this, I can't that. And as soon as they get their first, they file their first tax return, they're like, oh shoot, I get this much back, because obviously you got the mortgage interest and the property tax deduction, right? So now they're saving a little bit, and they're like, okay, cool. Oh, my property value is this much now. Like if I sell, I get yeah. Oh, cool. And then year number 2, they're like, oh man, I'm so glad I did it. And 5 years later, they're like, oh my God, where would I be if I didn't do this? It's always that
Well, the 5-year
like,
mark, absolutely. I bought my house in 08. We paid $800,000 for it, and you turned me on to this neighborhood actually. And my neighbor bought it in 09 for about $100,000 less. But honestly, I've made so many memories here in my house. If you look at Zillow, it says 2 point whatever. But of course, I don't believe until you don't realize it until you sell it. But I don't think I overpaid for this house, honestly. And even I bought at the height of the market. where my neighbor bought it for $100,000 less a year later, right? But I still
Mhm.
think I'm happy. I'm really, I've enjoyed my home. I've enjoyed being here. So I think, getting in and doing getting rid of the rent, man. The rent is insane. One of my neighbor's homes is for rent $5,700 per month.
Oh my god.
Unbelievable. Yeah. So
57. Okay, $5,700 a month in, let's see, 60 months, that's $342,000 if the rents don't go up.
yeah.
Once you're done with that, you walk away and that's it. Game
That's it.
over.
It's not
Like
your
you
money.
got
You
nothing.
pay somebody else's mortgage.
Yeah, you're paying somebody else's principal down. And when you own your home, you got the mortgage deduction, the property tax deduction up to a certain amount, of course, because there's limits. And then the appreciation, which is huge.
Right.
So you sell, you still, oh my God, I got a rent versus own, really nice rent versus own.
Joel Ramirez says 100% spot on, Lou. Thank you, Joel. Actually, it is spot on. And yeah, if you take into account what's going on, Joel, if you take into account what you paid off on that, what's your interest payment on that on $5,700 a month? I would say probably, let's say 2,000, $1,500 is going towards principal. So in that time period, you paid off probably what 15 times what 5 years? You said 15 times 6 is what? 6.
Hey, I'm not
30.
good at math.
It's about. I'm going to do it right now. Hold on. I can't believe we're not being able to do this. 15 times 60 is $90,000. So you paid off almost $100,000 of your debt. So.
Yeah. What you said, Ramin, because I tend to have a limited capacity, like brain capacity. Remember Windows 95?
Yeah.
That's my operating system. So I tend to prioritize, where I use that energy, and
it glitches.
That is not it. I'll even do 12 times 5 on a calculator.
Yeah, right.
Okay, not that bad.
Hey, Norika asks, how much can we get on a tax if we deduct all the interest of the property tax? What is the limit? Is there a limit to the amount we can deduct on taxes, Lou?
Yeah, 750,000, I believe. 750 mortgage interest.
Yeah.
If it's an investment property,
$750,000 loan, so you can deduct all the interest up to $750,000
up to
loan.
750. I think it's 1.1 million if it's an investment property. So you kind of caught on and put a limit on that. And then on property taxes, I believe it's 10,000.
10,000. That's the limit. That's the Trump ruling, I think. But
that I think that's state specific. I don't know.
Talk to your CPA. Sure. Actually, hey
Talk
man,
to your CPA.
I want to hear in the chat, guys. Can you guys please tell me what you'd like to hear about next?
On here.
I want to bring a CPA on here.
Oh, that would be a fantastic idea.
I want to bring a segmented cost analyst on here too. So the segmented cost is where I take my curtains and my the flooring and I depreciate that out of my home, right? So if you guys want to hear about segmented cost analysis, do you guys want to hear about 1031 exchange? Do you want to hear from a CPA? Or do you want to hear from an insurance agent? Okay, 4 people I want to bring on here. But also next week, we're bringing Mark Messimer from MLS Listings to talk about the NAR lawsuit again. And I'm also hoping to get Carl Lee on here as well. Carl was the president of CAR for a bit, okay? Or he was some big guy on the CAR, so California Association of Realtors. So please tell me in the chat, guys, who you'd like to hear from out of the 4 things. We have segmented cost, CPA, 1031, or an insurance person. Let me know.
Trust. Hey, what about a trust attorney?
That'd be great.
That's a big one.
I got
Look, check this out. In 2000, I've helped a lot of people in 2009, 2010, 11, 12. I mean, throughout the years, right? And I've noticed that, they bought, $300,000, $400,000 homes. They're worth $1 million now, $1 million, 1.1, 1.2. And they don't know and understand what a trust is and the importance of putting that home in a trust. So I think that's huge. I think that's big. I think that's very important. If you don't have your home in a trust, you got to do something about it.
Liability wise too, Louis, if somebody trips and falls in front of your yard because a tree root's making the sidewalk go up, a trust will be able to take the hit versus you taking that hit.
Mm-hmm. Well, I don't know. I don't know enough about that to talk about that. What I do know is there's a lot of benefits because I just went through this with my parents.
Oh, really?
Yeah, we had to rework the trust because they're getting at that age, and yeah, I learned it about it a lot. So
Nice,
yeah,
man.
it's important. It's crucial. Everybody should have one.
Joel Ramirez says 1031 exchange. You got it, Joel. We're gonna bring on a 1031 person, and that's gonna be an awesome conversation. I like the what is it, Old Republic title, uh, and she's been amazing. Sheila Long. So I'll bring her on next week sometime, and then we'll try to chat about that. Mark Messinger is going to come on, I think, Thursday of next week, and we'll bring Carl on here too.
That's good.
So,
I want to know. I want to know what he thinks. I mean, that's straight from the source on the whole buyer agent commission, because that I
Joel?
still feel it sucks for buyers, because especially the first time home buyers, the ones that are scraping 3.5% down to start. There's start like, God, I don't even want to say it. But
It's hard,
point
especially
is,
here, Lou. When you're talking about $100,000 house, okay, what is that? $3,000 for your commission. Okay, that's not a big deal. I can see myself spending $3,000 on a commission. So when you're talking about $1 million house, that's $30,000, right? When you're talking about $2 million,
yeah,
that's $60,000. And unfortunately, you and I know in this business, when we're talking to people, we're stretching into the maximum amount that they can buy, right? Because they want to buy that $1.93 million house when they can afford a $1.65 million house, right? So, but that's where the issue is going to be, I think. And I don't know how it's going to pan out, but I do see a lot of realtors trying to figure out like games to play with the different ways to hide the commission thing in there. I definitely would suggest not to play any games, because there's so many attorneys lined up on the sidelines just waiting for somebody to yellow flag, let's go, right? Flag on the play, I'm taking you to court. It's going to be insane.
Yep, red card.
Yep.
Tarjeta
You're
roja.
out, dude.
But yeah, again, the underserved community, that's who's going to suffer with these changes. Because I mean, if you already say you bought your house in 2010 and you want to upgrade, right? You already have equity. It's no big deal. Yeah, I'll pay for the buyer's agent commission, whatever. I'll make it up on the sale. But if you're a first-time home buyer and barely have scraped up, 3.5% down or 3% down, and now you got to pay your agent 2 or 3%. Let's just say 2.5%.
2%, easy
Where's
number.
that coming from?
Yeah.
Like how? Like if you can't finance it, then your offer's never going to get accepted, and then you're out. So
My
it
general
kind
math
of
for
goes.
mortgage, right? I say every $700 of payments per month is going to buy you $100,000 of house, right? So if you took that as a $60,000 commission fee, right, 2% of a million, right? So, 2% would be $40,000. So you're going to pay $350 extra, roughly, a month in mortgage just for your commission. That's a lot of money.
Damn.
Yeah.
I didn't look at it that way.
Ballpark.
Yeah. But if it's
Give
wrapped
or
into,
take.
yeah. Now, if you would see it in the savings on the home,
Right.
like if the house was $1 million and you were paying, $970 for it, okay, I get it.
Right.
There's some benefit there, but the prices are still going to remain the same. They're still going to go up, but now in addition, you have to cover this.
Well, so if you consider it as up to now, there were no boundaries, upper limits or lower limits, and so home prices were appreciating. If there's pressure like this commission thing on the top of this, I think that's going to probably decrease the amount of appreciation that we're seeing. We might not see a 15 to 20% appreciation next year. We may see a 12 to 15% appreciation, but it's still appreciation, man.
Yeah, Santa Clara County, 6.6% over a 63-year period. That's a good average.
That's an average, but if you take it year over year from last year, I think it was 15% from
I use the 6.6 appreciation
okay,
on
you're going
everything.
right.
Yeah, because that's a little more, that's a stronger way, a more conservative approach to it. If I use the 12%, we don't hit it, well, we're in trouble. But 6.6%, you'll hit it every time. And if you do the calculations based on that, the numbers still look incredible. Like a million, that's 60,000, that's 66,000 every year in appreciation on a $1 million home. Think about that. Like nobody, like you got to stop and think about that. 60,000 times 5 years, that's 300,000. That same home that you're buying today for 1 million is going to sell for 1.3 million in 5 years. And that's not compound. I'm just simple
interest. Yeah.
Yeah. If you compound it, it's higher. But remember Windows 95, I don't like
Ticking. Hey, Joel Ramirez in the chat. He's Barry Habib is the GOAT. He is actually the GOAT. You guys are right there. Thank you so much for your content. And if you had to pull at some point to speak with Mark Calabria, man, that guy's an enigma. Absolutely, we'll give that a shot. If you got some pull, Joel, hit me up and let's get Mark in here.
Let's go. I love it. I love it.
And actually, I would like to bring on next week sometime, or the following week, I'm not sure, but Jared from our group, he is the guy who's in charge of finding new business for us to buy loans from, or our market specialist, essentially. And he's got a great tap on the pulse of the market and understands the ins and outs of what's going on. So I think he's actually a mini GOAT compared to Barry, but he's a GOAT as well. So we'll try to get him on here as well next week.
A mini goat. You just call him a mini goat.
Yeah, there you go. Right. You don't have that on your soundboard, do you, Lou?
I don't.
Yeah. Okay.
I should have it.
All right, man. Hey, passing thoughts here. Parting thoughts, Lou. Rates gonna come down.
Rates are gonna come down. Ebb and flow, baby. Ebb and flow. That's all I got. Don't believe the hype. Don't listen to that clickbaity stuff. Yeah, talk to the right people.
I got two factors here, man. Number one is the election. Number two is the unemployment numbers are going off the charts now, especially with the spotlight on the BLS reports now. So I'm going to see job reports coming back a lot higher. People are unemployed than we think they're unemployed. Number one. Number two is the elections coming up, and I definitely think the Fed's going to lower the rate. My prediction, 0.5 by the end of September, and at least 0.75 by December. I think somewhere in that realm.
It's I just thought of one last thing here. You got back to school, people go back to work, so that's going to skew the numbers.
Jobs are jobs, bro. I don't know if school has anything to do with jobs getting out there, right? If I'm an employer and I'm producing less widgets, I'm not selling widgets anymore, I'm going to fire you, Lou. Sorry.
Yeah, what about the teachers that
teachers are teachers?
They're not reported, are they? That's a good question.
I think they are reported. They have to be reported. And you know what? Look at the ADP numbers. So actually, that's a very good point. You know what? We're going to look at that. I'm going to look at that market. So I'm going to look at that and report on that back. And
they get paid when we do the loans. They get paid 10 months out of the year.
Right.
So remember, their annual salary is divided by 10.
I see where you're going with that.
So
well, let's do some research and kick that up on LinkedIn. Hey guys, thank you for joining. I really appreciate it, guys. We're going to come back with you at 10:31 next week. And we're going to come back to MLS listings so we can get some insight on the NAR lawsuit. Thank you guys for joining us. Really appreciate it. And giddy up.
Yeah, I'll see you guys soon.
Mom's spaghetti, he's nervous, but on the surface he looks calm and ready to drop bombs.